So a short-term business loan can be a really great solution in your business, but it all depends on what you're looking to use a short-term business loan for. Short term means getting repaid back quickly in a 3, 6, 12, 18, 24-month type of period. You want to use those for things, for growth opportunities. You're going to be able to borrow money, go do something in your business, and then get a return. One example is an inventory purchase. You're going to go buy inventory, and then you're going to sell it, get your money back in 30, 60, 90 days, and you can repeat that process, do it all over again, and actually keep the capital in your business. Another opportunity for a short-term business loan is you're doing a bunch of work, you haven't gotten paid on a certain job, you've got the ability to take on another job, another opportunity, whatever that is, but a shortage of capital is preventing you from doing that. So you borrow money on a short-term basis, you put it to work in another job or opportunity, and you're going to get paid on that job or opportunity pretty quickly. That's another perfect example. Here's when not to use them, which most people don't talk about. Things that are going to be like long-term purchases. So like a piece of equipment, right? You can finance equipment over 3 to 5 year terms and even sometimes 10 years. So you would want to use a specific lender for that piece of equipment and finance it over a longer period of time. Here's another thing. Improvements to your business that aren't necessarily going to generate cash flow. Maybe you own the building, or maybe it's just time to revamp the inside of your business. If you own the building, maybe you have to redo the parking lot, the pavement, the roof. Things that aren't going to have like immediate improvements to your cash flow. But that's when you want to maybe utilize like an SBA 7A 10-year repayment period, where you can do improvements to the business, bring in some working capital while you do those improvements, but not strap yourself with short-term debt. So I'd argue like you wouldn't want to use a long 10-year 7A SBA loan for inventory purchases. If you can go buy inventory in bulk and purchase something, get it, sell it, and get paid on it in 30, 60, 90 days, and you've got opportunities to keep doing that, then you would want to keep using that short-term solution to continue to keep growing your business as long as it's priced out the right way and makes sense rate-wise. And there's a lot of lenders that will offer early payment discounts to do those type of things. So any situation where you can do additional work, jobs, or opportunities that have quick returns on capital, you want to use that capital to your advantage to grow and scale your business. So anything that's going to not have like an immediate surge to your income and profit is when you might want to look for something that's a little bit longer term, or it's something that can just be financed over a longer period of time, like a piece of equipment. So how to get short-term loans? Well, what's wild today, if you type in small business loans, short-term loans in Google, a million things will come up, and it's super complicated. There's all these different lenders out there today, online, fintech, alternative lenders. It's great. It's provided a lot of capital options for businesses that were not there years ago. And it's the exact reason why I founded National Business Capital in 2007. We've helped secure over $2 billion in funding for business owners just like yourself. We've done 27,000 transactions. So to answer this question, it's self-serving for me, is how do you get these type of loans? Well, you would go apply on my platform. Now, I say this selfishly because we've created a great platform that has over 75 different lenders in one place. So National Business Capital is really a business lending platform or marketplace for business owners like yourself. There's SBA options, short-term loan options, long-term loan options, line of credit options, equipment financing options, inventory lending options, all the different financing that you would need for your business all in one place. You apply in one place and we help you get matched to the right lender. You really want to work, if you're going to look for business financing, with somebody that has access to a number of different lenders. The reason why is all lenders are not the same, all borrowers are not the same. So depending on you, your business, your industry type, where you're located in the country, how long you've been in business, are you profitable, are you not profitable, all those things will make up the right or wrong lender for you to apply with. Sometimes you can have excellent credit, but based on your cash flow, based on how long you've been in business, based on your specific industry, will make up whether you're going to get the best deal or not from one particular lender. Now, you still may get approved by a lender, but those may not be the right terms. So it's important that you work with someone, whether it's my company or another company, that's a marketplace, and they know what they're doing, they've been around for a long time, they're trustworthy, and they've got access to a number of different lenders and lending products. Because depending on what you're looking to get accomplished will make up the right short-term business lending solution for you. Whatever your business is that you own, you really own a hedge fund. You own a mini hedge fund. Now you might be looking at me like, what the heck are you talking about, Joe? I don't own a hedge fund. I own a construction business, or I own a restaurant, or I own a marketing agency. I don't own a hedge fund. No, you actually do. Here's what I mean by that. It's our job as business owners, CEOs, leaders of our company to take capital, to put it to work, and to get a return in it. And putting capital to work could be hiring people, it could be building out tech, it could be marketing, it could be buying inventory and selling it, it could be taking on additional jobs and work. All of those things are functions of putting capital to work and get a return in it. So the benefits of using a short-term loan is you want to make sure that you're using that loan for things that you can get a return on your capital in a short period of time. It's really that simple. So what you're borrowing, what's the cost of that loan, and what is the ROI on the opportunity. And you really need to know how much money you're making on your opportunity. If the opportunity outweighs the cost of capital, you got yourself a good deal, and go put that money to work. And don't just do it one time, keep doing it again over and over and over. Debt is not evil. Debt is a good thing. We were raised that borrowing money, having any debt is a bad thing. Don't have any debt. That's what our old school parents taught us. God bless them. They were great for this. But in business, debt is healthy if you're putting it to work and using it to your advantage. And usually it's a lot cheaper than selling equity in your company. So make sure that you understand your cost of capital, make sure that you understand your opportunity, and go and put debt to work and scale and grow your business.